Today, I will show you exactly how you can be using technical analysis and order flow to find the best trading setups in the market from a swing trading perspective. So we will be taking a pair, analyzing it from a technical and order flow perspective. And by the end of the video, I will show you exactly where is the best area to be looking for a potential trading opportunity. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel so you don't miss out on all the free education that I put out, and I will see you in the video. Okay, so as you know, GBPUSD continues to follow our analysis to the PIP. In fact, the market currently is starting the move to the upside that we wanted to see, exactly as we said in our previous analysis. So it's time to make an update on the pair and see where is the next potential opportunity that we can be looking for on it to obviously capitalize on the move. Now, that is exactly what we will be doing in this video. So we will be taking GBPUSD, making a full analysis on it, checking obviously what we have from a COT perspective on it. So what the biggest banks and institutions are doing on the pair after our multi-time frame technical analysis. And obviously we will see where is the best zone for a potential trading opportunity on this pair. Now, first of all, just a quick recap of our previous analysis that we did on GBPUSD. We did quite a lot of breakdowns on GBPUSD and the market followed all of them perfectly, and I will link all of them in description. So first of all, we had this impulse and this correction, and from here we wanted to see this move to the downside for a very large amount for many reasons. Okay, there is a quite long list of reasons from which from here we wanted to see the market make this move to the downside, and in fact that is exactly what the market has done. I really suggest you go and check out the analysis in description. Then again, the market had created this a W formation here, and after a W formation, what do you want to see? After a W formation, specifically because the completion zone of the formation was the previous support turn resistance. From here, we wanted to see the market make this move to the downside, and that is what the market did. And again, I will link that analysis in the description so you can go and check out all the reasons for which we wanted to see the market make that move. Then again, what did we have? We said after the market had created this M formation, we said from here, which is obvious, which is also the previous resistance, not turn support, so a strong demand area for this market. We want to see this move to the upside to complete this M formation. So we wanted to see this daily M formation complete to the upside at the neckline, rejecting this strong demand area for the market, which again the market has done, giving us this nice move to the upside. After that, what did we say? We said from here we want to see the continuation to the downside for the creation of a lower low, and in fact that is exactly what the market did, and obviously we capitalized on this move to the downside with students. Then again, what did we say? After the market had created this move to the downside, so 1 2 3 4 5 waves to the downside, we wanted to see the market completely invert the trend, which is exactly what the market has again did. And by the way, all this previous analysis are all linked in the description of the video, so you can go and check them out for more reference. Then again, what did we say? We said from here it would have been great to see the market make a retracement to capitalize on the continuation to the upside. However, the market continued the move to the upside without giving us the retracement that we wanted to see to capitalize again on the move to the upside. And I then made an update telling to all of you guys, the market has created this W formation. We definitely have very high probability of seeing this move to the downside to go and test this structure level here. And in fact, that is exactly what the market has done. It went to retest this structure and we capitalized for a nice day trade with students on this move to the downside. And then with the last analysis that we made, what did we say? From here, we want to see the market start a move to the upside, reject this previous resistance, now turned support, and start the move to the upside to complete this impulse correction and impulse pattern to the upside. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So everything has been moving exactly as we wanted on this pair, and what kind of situation do we currently have on it? Let's make a full analysis and see where we can be looking for the next opportunity. And don't remember at the end of the video to go and check out all this previous analysis, because it is a lot of free education. So let's start our full breakdown from the monthly time frame and go down all the way to the 4 hours, check what we have from a COT perspective and see where we can be looking for the next opportunity. So starting here on the monthly, what we can clearly see is that the market has rejected a very strong support area. In fact, we had this zone acting as extremely strong support here, preceding all this move to the upside, again acting as support here, preceding all this move to the upside, and again as support here, and the market currently rejected the zone. Now, why did we specifically wanted the market to be bullish this month? Because if you look at the previous monthly close, you can see that this was the shape of our last monthly candle. Okay, so a candle with a very long wick, a small body which is green. Now, we spoke about this candle very often. Okay, a candle that has, for example, a green shape and a very long wick. What do you expect? You expect the next candle to fill in this wick, and this pattern works on all time frames. In fact, you can go and test this, and I also made a YouTube video specifically about this pattern, so you can go and check it out. So we definitely wanted to see this monthly candle that we are currently in be bullish. Going down on the weekly time frame, what kind of situation we have? We have a market that, as you know, if you want informations on a retracement, what you have to do, you have to take the Fibonacci on the impulse, which in this case is this huge move to the downside. So taking our Fibonacci from the high to the low of this huge impulse, what we can see? We can see that clearly the market rejected the 0.786, broke all the way down, and then closed back above the 0.618, aka the golden ratio, which is now acting as strong support. In fact, after closing above it, the market retested it last week. The retest held. In fact, the market closed above it, and currently we have a market which is rejecting the zone. However, it's very important to say that the 0.786, as we have just identified, is at this area, and this is a very strong resistance zone, which is not only a resistance from a Fibonacci perspective, but also from a structure perspective. In fact, the last time that the market went to the upside, okay, before creating this huge move to the downside, is exactly here at this previous support, which is now turned resistance here, and obviously will be turned again resistance here if the market will approach this zone. So from the weekly time frame, we have clearly identified a strong level of resistance, which, as we said, was the previous support and resistance, and in confluence with the 0.786. So if the market reaches the zone, we definitely expect a retracement away from the area. Going down on the daily time frame, what is the situation? Now, first of all, let's clear up our chart. The only thing that we need to remember is that clearly we have strong weekly resistance here, confluence of resistance here from a weekly perspective. Perfect. We don't even need all this huge box. We just need a reminder that we have resistance here. So let's just put a small box here. We know that we have weekly resistance around this area. Actually, to be precise, this is how we're supposed to be putting it, because it is the wick of the candle before the move to the downside. Therefore, it is a strong supply area for this market. Now, on the daily time frame, what we have, as we have already said in our previous analysis, we had the W formation, we had the completion of the pattern at the previous resistance, now turn support, and we wanted to see the continuation to the upside, right? However, look at how the market is actually moving to the upside. Which pattern is it creating in making this move to the upside? Look, the market went down, up, down, and now it is moving to the upside. Which pattern is it? It is a W formation. Now, if the market will create an overextended W formation, that is where things get very, very interesting for a possible capitalizing opportunity. Now, an overextended W formation is a formation in which the market creates an overextension with the last leg breaking above all structure. So in this case, a move to the upside to go and test exactly the supply that we have on the weekly. Things start to combine here. So if the market will create an overextended W formation, we expect a retracement away from the area, therefore a move to the downside. But at that point, we start to understand that in this case, we would have a very good area in which we can be looking for a potential trading opportunity, because we would have an overextended W formation retesting a strong confluence of resistance from a weekly perspective. So a bearish pattern on the daily testing a strong resistance on the weekly, which is also a supply area on the daily time frame itself. So this becomes a very interesting area in the market for a potential trading opportunity. But before I show you how we will be approaching this trade and this market with students, let's go and see what we have from a COT perspective on the pair. So commitment of traders, which is what the biggest banks and institutions are currently doing in the market and how they are positioned. And obviously by following their orders, you can gain an advantage over your competition in the market. Now, by looking at what we have here from a net position perspective, we can see that we went from 35K net positions all the way down to minus 36K net positions. So we went from having way more longs than shorts from an institutional perspective on GBPUSD to having way more shorts than longs, with 63K shorts and 26K longs. And with the last report, we can see that in the short term, obviously there has been some buying from a GBPUSD perspective, with another 3.2K longs added with the last report. And in fact, GBPUSD has been moving to the upside quite aggressively because hedge funds have been longing it. Now, why say hedge funds have been longing GBPUSD if we are only checking the data for the GBP? Because all currencies on the spot are traded against the USD. Therefore, if you're checking the data for the GBP, what you're actually checking is GBPUSD itself. So what we can see in the long term is a clear selling, but in the short term, a clear buying. So that is perfect for us because it means that we have the possibility to go and test the level. However, we still have a lot of shorts, so more shorts than longs from an institutional perspective, currently 56K shorts and 43K longs. So we can still expect some weakness and a shift away from the area. So if the market will actually manage to make a move to this structure resistance, which is obviously confluence of resistance on the weekly, W formation on the daily, actually overextended W formation on the daily testing its zone, then inside of the zone, this is where we will be monitoring price action with students on the 4-hour time frame, because always remember, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But when it comes to entry, the best time frame is the 4-hour time frame. So with students inside of the zone, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of the pattern at the neckline, aka the previous resistance, now turned support at this zone. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video. videos.